How's it going today? Today we're going to talk about the earnings lookout for the whole quarter. I'm going to make weekly ones, but I'm going to just do an quick overview of the whole market. It's going in the fourth quarter or the end of the year. I think this is my favorite time of the year in the market. It views all the whole year, and it's a kind of a window into next year. What's going on? Anything? Just getting right into it. I don't want to make this too long. We always kick off with banks. Banks reporting next week. This week, I guess it'd be next week, whatever you want to call it. But anyway, they're kicking off. So it'd be J.P. Morgan and Bank of America. That's the ones I stay watch. I believe there could be some not big moves, but it's always I believe the way the banks. It's always good to look at the banks. I think banks are good stocks to always own in your portfolio. They pay a nice dividend as long as you get them for a good value. As long as you get them below kind of book value or somewhat around book value. So essentially with the banks, they're good. It should give you a good outlook of the economy, how good it is, consumer spending, especially Bank of America. If people are taking out loans, obviously they think they're doing pretty good or whatever. They think they can pay it back. So essentially it's a outlook on the economy, how good it is. If banks do bad, then, well, the whole economy does bad. I mean, you look at 2007. I mean, the banks did horrible. Well, I mean, it was a banking crisis, but a lot of these banks, even if they weren't involved, got hammered because people can't pay back the loans, and that's how they make their money. Simple as that. And the next, coming up over the next weeks, is Apple. Apple is actually now an all-time high, 232, 36 or 37, whatever it is. And I could post a video. I actually called it a good time to buy around 160. So essentially, it's been good this year. Apple's done a really, really good job this year. I mean, it really sold off last year in the fourth quarter last year. Hopefully, this this fourth quarter won't be like last year because they got killed last year. But anyway, basically, when I'm looking at, can it hold it up? Can it hold up? So, I mean, you look at it. I mean, all that trade thing. We got a trade deal with a partial. I don't know if 100% what that is going on there. I don't know how that's going to heavily affect Apple and all this. I think it was overblown, and I think it was. I think the trade war is kind of slowly dying out now. It's slowly kind of fizzing out. So essentially, I think Apple, it's the question, can it hold it? I can leave that link down in the thing why I like Apple stock, and I still like it at these levels, but it is an all-time high. So maybe if you have a large position, maybe trim it a little bit, or maybe just hold on to it if you still believe in it. I could leave a link down in the descriptions, talking about the kind of the new age for Apple. They're not going to be a device. Well, they're going to be a device, but it's all about the service streams now. So that's Apple. Moving on to Amazon. Amazon also reports the same week as Apple, and Amazon has almost been kind of disappointing this year. It went nowhere. It's actually sitting around its discounted cash flow values around the 1,700 range. So will it recover? Will it keep going? It's almost just kind of sitting there for some reason. I believe it's that 1 day shipping. It's funny how the stock market works. The earnings get hit because they're developing 1 day shipping, which if you think of for a consumer, that's really, really good. Now 1 day shipping, that's amazing. I mean, if it can keep up with 1 day shipping and do that, I mean, that's going to be amazing for Amazon, or really all delivering. It's going to just move it up. So, but it costs a lot of money to do 1 day shipping. That's a big investment, and it's kind of it's amazing what Amazon's doing over the last year. I mean, they're always changing. I ordered some things off there, and actually they bring an Amazon truck. It's not UPS, they had that FedEx too. So essentially they're spending a lot of money, and that's what Amazon does. It really doesn't focus on the bottom line. It's all about growing that top line. So I believe Amazon is one of these things. Will it recover? Will it hit over the 2,000 and plus? I think that's really what it's going to look at. And it's a consumer confidence type thing. Obviously, people spending money on Amazon and spending money. Obviously, the economy goes to. So essentially, that's the other thing. And now these are kind of the category. Will they recover? They've been flat or been hammered over the last year, and I don't know why. They've been doing okay. Some of these companies are doing better than others. The first one is Square. Square. This company's been getting hammered for some time. I think it's almost down almost from its all-time high. I remember it was almost around 100, but now it's down like the low 50, the 50s, the upper 50s, lower 60s. So essentially, for some reason, this stock's been getting hammered for some reason. Over this whole year, it would run up and then get hammered, run up, then get hammered, run up and get hammered. So essentially, I don't really know why. I think it's a good company. It's been growing. It just had its first $1 billion quarter. I mean, its revenues are really, really good. And then the stock gets hammered. It's showing profitability, has cash flow, has more cash flow. So essentially, I don't know why Square stock's been getting hammered over the last couple, especially that much. I mean, it's not like it's like 1 or 2%. I mean, it's down over the year. I think over what 28%, 30% over year. So essentially, that stock get hammered, and I don't know why. Maybe pick some up heading into the quarter. Anyway, will it return to kind of growth, which is kind of already growing, but I guess not good enough, I guess. And the next one is Uber. Uber is one of these stocks I keep looking at. I still like it. It's been getting hammered and hammered and hammered. I think maybe it can turn it around. Maybe so that's one I'm definitely looking at. This is kind of like the will it recover? It's kind of flat. And the next one is Arista Networks. Also, it ran up a lot, then kind of went nowhere. It ran up early. I remember it was like up in the 320. Now it's sitting down at the lower 200. So essentially, I don't really understand what's going on there. I believe it can go a lot higher. It has some growth, has good earnings, but it's getting hit. So essentially, them are the stocks you kind of want to buy heading into earnings, as long as there's not a big issue with them. I mean, don't dumpster dive. I mean, pick up, Anyway, and now the big ones that got hammered was the high growth stocks. All of them, I'm talking Zscaler, Zendesk, Shopify, MongoDB, The Trade Desk, Twilio, Match Group, all of them got hammered. And it's almost, can they recover from these? I mean, because they got hammered for no particular reason. And can they recover? I mean, these are the stocks I'm going to be watching the most, because first is my highest winners these years. And it's probably some of my largest holdings altogether. So essentially, that's why you gotta watch them for the most. I mean, these stocks ran up a lot. I mean, the Trade Desk was almost over 100% this year. Took a hit. I mean, so almost 3 times. Actually, almost 3 times. It was almost at the 100. I think it was 104. And then it shot up all the way to 289. So essentially, I mean, that's a pretty big gain. And then the stock got hammered and it's down to like the 200s now, and the 200, I forget exactly. But anyway, them are the stocks you got to watch for. I mean, and especially Twilio. I think Twilio actually bought recently some more Twilio stock. I think it's going to have another $1 billion year. I mean, it's just broke over the billion. I think that's almost a $30 billion company, or at least a $25 billion company. So as you can see, that's why I like Twilio. I think Twilio can keep going, and I think it can hit more highs, especially it's growing the way it's going. And I think Shopify. I think Shopify is one of these stocks. I saw it coming because it was running up a lot. But I still watch it, I mean, so, some of these stocks are high growth. So that's where I keep on. I'm going to make another video of talking about all these when they report, like Facebook and all that, and Google. I really hate to make this too long. But anyway, that's the one. Just do a quick review. Basically, the banks are next week. JP Morgan, Bank of America, they're the only ones I own in the bank thing. Hopefully they do well. Apple, can it hold at its all-time high? It's at an all-time high. Amazon, can it recover? I think yes. I think it's overblown with all this one-day shipping. I mean, it's kind of ridiculous. They're moving into one-day shipping, and then the stock gets hit. Because it costs more money. I understand why it got hit, but I think it's kind of silly. But anyway, Square and Uber and Arista Networks. I mean, they've been flat. I mean, normally these stocks to come flat. In my experience, they go stay flat. They go run up, and if they're still growing, they go stay flat for a while. But then once they have a good earnings, they could just take off. So essentially, and that's that kind of group they have to kind of watch. And I think Square, if it can turn it around, I think this is going to be a return to growth story, and this stock's going to go up a lot higher. I mean, it can almost hit 100 or so if it returns to growth. Now, if there's more problems, it ain't going nowhere. And the other high growth companies, very high growth companies, I mean, can they return? Can they be returned to their glory and be in the top stocks you want to own that are keep going up and up and up every day? And I know that's kind of realistic to go up and up every day, but Some companies can. But anyway, that's it for the earnings review for the week. For the whole earnings, I could do weekly ones. Anyway, like and subscribe. Everything like that. Thank you. Bye.